Big picture analysis, gold. All right, the last time we looked at the big picture of the gold market was August 13th. That was 3 months ago. And the markets have pretty much followed the patterns that we did expect. And now we have been in a period of decline, and I've been making a case that there is a important bottom coming, well, fairly soon, and that after that we could expect a more favorable period. This is also a good opportunity for a lesson in longer term momentum and when something is a swing trade versus potentially an investable trade. So we're going to look at several different variations of charts and different time frames, 5 charts that we're going to look at actually in this whole analysis. Have been making the case for this bottom coming in gold sometime mid to end of November. I'm going to show you where that timing comes from, and then how to get a sense for, well, when that bottom is in play and we can actually start buying gold or accumulating it, or at least trying a little bit of it and seeing if a bottom is in place and potentially for a pretty good trade. And I'm going to show you some of the historical moves in there in the last couple of years that are pretty good measures of what we can expect, even in the case of, well, if it's not a big bull market starting, but just a normal bounce. So we have some great stuff in here that you can look at. I think there's some good lessons to use in all markets when you're looking at some longer term analysis as far as the type of tools that we're going to look at. So the first chart that we're going to look at is our normal gold chart. And what I want to show you looking at that chart is that based on the cyclical timing and the cycle phasing that we look at, we're apparently in a final phase. And then we'll look at some variations of that chart, and you'll see where I think we are right now. So here is the normal chart that we look at. Now there is 2 big cycle patterns in here. I want to be clear. This one right over here is the cycle bracket of the one that I think is the most reliable. There's a bigger one in there right over here that's out of phase with the smaller one that may come into play sometime much later out there. We'll see, because it still has some validity to me, but we're focusing on this other one right now because it's been so solid. So we're going to look at, you can see in here, 1, 2, 3 cycles there in this bigger one, in this smaller one that's right here, starts and ends right over there, and then 1, 2, and 3 cycles right in there. And we're going to look at how consistent that cycle is. I'm blowing it up right now. And what I want you to see is that this red zone that we're in, based on the nesting of these 2 cycles, suggests sometime around the end of the year as the low of this decline. Of course, what we want to do is examine what happens during these final periods over here, and how we even know when we're getting to a point where we should be buying. Now, if I come down in here and just look at the supports that I want you to look at, now this is what I did looking recently at the last Future Speak we did, showed you that this is a big area of support here at 945, a monthly support zone. That comes in there. There are other supports that I'm going to show you. See this big line over here? That is a major 50% right there, where it's trying to hold together pretty close to that right now. So I'm going to show you this on a bigger chart also, and you'll see those numbers. So this is an important area for gold right now, as we're in this red period, and it can fall pretty hard when you're in a period like that. So the next thing we're going to do is to look at, well, I just showed you those cycles that are on there, showed you 6 of them. The question is, how reliable is that chart that we're looking at, and how far back do those cycles go, and how do we really know how to read those cyclical patterns? Now remember, cycles are measured from low to low, so what we try to do is look at other ways that we can get confirmation that of the cycle shape. And one of the best ones, and you'll notice that it's pretty consistently on my weekly charts now, is the Hull moving average. That helps a lot with understanding the cyclical movement. So the chart I'm going to put up now is the weekly chart with the Hull moving average, but I've gone much further back. And I showed you those 6 cycles, but I want you to see the amazing consistency as we look at a chart now back to 2008. And you're going to see 15 of these cycles that have been really pretty consistent, with the Hull moving average being a help in seeing those cyclical lengths. Here is that chart right now, and here's the period that we just looked at. And you can see this channel of these 6 cycles right in here, 1, 2, 3, 4, 5, and where's the 6th one? Okay, that isn't lining up perfectly, but it's 1 here, 2, 3, 4, 5, and 6. Okay, so that aligns pretty good. There you go. And so those cycles in there, let's look back, and I'm going to trace all the way back from 2008 from that bottom, and you're going to see that these cycles have just been extraordinarily good. You can see this one right in here. So when you get them in line over here, they tend to be a little off as you go further back. It's a miracle that this is lining up as well as it is. So that's one there, and you can see here as the Hull moving average helps you to see those cycle patterns right in there. Just beautiful consistency. The major top comes down, this cycle right in here, and this one right in here, and a break that was barely readable, a left-hand translation, and here is that cycle, and then the next 6 that we looked at. So beautiful cycle patterns in there. Now let's take a look at the value of the Hull moving average in here. Let's just go from the top right over here to what cycles that we're looking at right now. And you will see that the Hull moving average has been helpful in seeing these cycle patterns. It really helps you see this one right in here, how clear it was. This one, how clear it was. This one, the rally, just imperceptible, and the Hull moving average never turned bullish, so that shows you how negative that is. Comes down right over here, and then you can see these other 6 cycles very, very nicely. So there you are, 15 cycles that are almost equal length, all the way back to 2008. The variance gets a little off when you get a little further back, and that's normal. But the principle of variance in cycles is hardly even showing up here for the last 6 years, as most of these have been very similar in length. So beautiful cycle action. So I want you to keep in mind this trend that we've been in right now. This has been since the peak here in 2013 to where we are now. So this is about the last 2 years. So we're going to use this 2 years of data in another chart right here. So this is really an important thing to look at. Now keep in mind this 6 cycles in here that are within this downward channel, because we're going to focus in on the next chart on that channel, but look at it in a little different way. So the next chart we're going to look at is a standard deviation channel. And I think that you're going to find this really fascinating as we look at those same cycle patterns for this last couple of years. Put it on a standard deviation channel. Now I tend to use 3 standard deviations when I set these channels up, even though it is very rare for something to get to 3 standard deviations on a weekly chart. As a matter of fact, extraordinarily rare. Often when you do it on a 2-hour chart, you can get to 3 standard deviations on big crazy moves, but not on these charts. And these are amazingly consistent when you look at this. And when we look at gold, this is almost shocking at how good it is. Look at gold as it trades through up and down into just above the 1 standard deviation. This one got to 1.5. And this one got to almost 2 on the downside right there. And the rest of this time, it's been between just over the 1 standard deviation and just below the 1 standard deviation. And you could see the clear downtrend in here. Remember, this is built off of this center line right over here, and just fluctuates on both sides of it. Now you could see the Hull moving average as it has continued to signal these cyclical patterns that we look at. And now this cycle we're in, the question is, did it get close enough to the one standard deviation, as it tends to get support from just getting close to it or through it by some amount, as it got close to it right now, and is there enough time in here? But great action between the -1 standard deviation and the +1 standard deviation, and you could see each of the cycles gets the last three have gotten down close to it or through it, whereas this one over here kind of hung around the regression line, which is what this is built off of. So this is standard deviation channels, and we're getting down close now to the point where it gets oversold and gets ready to get a bounce. So the question is, how do we know when those cycles are over, and how do we know how much bounce to expect? Or decline to expect, actually, when you get to one of those cyclical peaks. And of course, we're investigating now a bottom, so we're going to be focusing on a bottom in here. And take a look now. So this chart looks at the same period of time that we were looking at before. We're looking at 2 years in this downward channel, but what I have here is a daily chart. And this daily chart has the weekly cycles in it, and I have them marked off, as you can see. And you can see that there is a nice, very, very clear similarity. This one's a little short in all of these cycles right over here. And note that this one is early. That's part of this discussion that we're going to have. This is those 6 cycles that we're looking at. So also want to mention that there is a bigger cycle pattern that we looked at. Remember that each of these 3 was made up of a big pattern right in here that looks something like this, and then this big one right in here, and now we're in the 3rd cycle coming down right here. That is the smaller of the 2 of the big cycle patterns I showed you on that last weekly chart. So each of these has very nice market geometry to them. So here's the difference in here, and that is that we're going to use this chart to help us see that there's specific formations that are going on within each of these cycles, and use that to help us understand each of the parts of these cycles as they rise and fall, and how we'll know that a bottom is made here in December, and that we're going to be able to then capitalize on a rally, and how much rally to expect. So I want you to note in here that, remember, this was the first rally of the 3 that we looked at in this cycle pattern right in here, right? This first one had a 250-point rally. Then 250 bucks. Then what it did was continue down in a downward channel, and then ended up with a hard sell in the last month. That's a capitulation right there that happened to end that pattern. So it had a little fake rally that you can see right over there, and then what happened was it gave up and had one more big sell-off. Now, what I want to look at here, and for confirmations for the bottom, let's look at this one so we can see the clarity in there, is that what happened was that it, right over here where this 813 exponential moving average turned down again, this is, remember, the bottom 2 moving averages of the slim ribbon. I just kept it simple, just using those. That turned down, and that gave you this final phase and into the final month of a very hard sell-off. And you could just see this last week and a half or so was a very big sell-off right in there, as they truly capitulated. There was a fake rally right in there, and they gave it up. Then when this trend line was broken and this 813 exponential moving average began to turn up, that was the sign that this whole cycle had ended and you were in the next rally. So what we want to look at in here is each of those cycles, how they acted, how much of a rally you got. Remember, we're talking about operating within that 1.5 standard deviation area on the weekly chart in either direction. And here it got down to that like 1.5 standard deviations, had the big rally of $250. Here, the next rally was $212 in the next cycle. This one, well, it had the same type of a pattern, a fake little rally in here, and then a capitulation in that final period there, and then rallied only $108, but it only got down, remember, to that area of the linear regression line. It didn't really have that big of a sell-off in there, so it had a modest rally from that level. The cycle ended in a very similar fashion in here. Remember, we're looking at this cycle right in here, and it had a fake rally and then a capitulation, a very hard sell-off right in there. Now, that was the third of this 3-cycle formation right in here. And when you got to the first rally in the next 3-cycle formation, $180 on the upside. That's significant because we're about to end that 3-cycle formation and move on the upside. That says to me that the next rally in here is likely to be at least 180 points and at least to the top of this downside trend line in here, up around the 1225, 1250 area. From where we are right now. The question is, as you can see in each of these cycles, they capitulate on the end, capitulate on the end, capitulate on the end. Where are we right now? Well, we're early in this cycle, and we're going to look for similar things to happen. Number one, what are we looking for to happen in here? Well, it would be that maybe get a little fake rally as we have in these other cycles. Look at this crummy little fake rally of about 3 weeks and then capitulate right there. Couple of little rallies in here, a couple of weeks, and then a hard sell-off. Well, we don't really have much of a rally going on yet in here. Maybe we get a little one in here, but keep in mind that 813 crossover and that trend line crossover got you the rally. 813 crossover, trend line crossover got you the rally. So we're going to look for a similar formation in here. We don't really have a good downtrend line to draw. Maybe that will form yet in here. And remember, we're talking about this next month in December, potentially having a hard sell-off of some sort in order to get a throwaway in this market and then to make the bottom we're looking for and to set up what should be a very good rally. So you can see how valuable it is here as we're looking at this daily chart on with the weekly cycles measured off in there, looking at 813. I think I said week a couple times, but of course these are 813 day moving averages. And then I say so many things about different time frames. Sometimes it's hard not to confuse them. I want to make sure you understand. These are 813 days, the bottom part of the slim ribbon, overlaid on what is a weekly cycle measurements right in here. And now looking for some sign in here of a final capitulation, some downtrend to draw, and crossover this 813 day moving average to give us a sense that we're moving into the next rally phase. That's really what we're looking for. So I hope that part of that wasn't confusing because I said something wrong. I do that. But very, very clear. You could see all these cycles all operating with what was 1.5 or so standard deviations through what was a line coming down the center in here. It was a linear regression line when we looked on that other chart, and now getting down to where it's oversold but early and still looking for a potential downside capitulation there in the gold market. So that is looking at this, I think, really valuable set of charts. There's one more chart that I want to look at, and this is about looking at, okay, we're looking for a bottom to form in here, and we're also looking for a sizable rally once the bottom does form, probably to the top of that downtrend line in the low 1200s. Even in a bearish case, if we're still going to be in this bear market in gold, we really look like this uptrend that is going to form pretty soon is going to get us a big rally. Now, confirmation is that as there's perfect alignments in here also in many of the gold stocks and the GDX. So I didn't want to bring all those charts But if you go and look at it, if you look at my cycle charts, if you happen to be a level 4 member, you'll be able to see that also. So nice alignment. Silver aligns in a similar way. So we have all of this stuff. The question is, how will we know if it's a big bull market starting again, or that we're in a swing trade? The question is, is it a trade that we're going to hold for some similar time period that we saw back in each of these rally phases that were mostly a couple of months on the upside? Or is it going to be a major bull market that starts? So the next chart that I'm going to bring in is a chart to help us with that. And this is a really valuable chart for big picture analysis, and it's a monthly chart of the monthly slim ribbon. So we're going to move this chart in here, and you will see gold monthly slim ribbon, and this has got great messages to it. First of all, the slim ribbon turned bullish over here. See that green arrow on this monthly? Way back in 2003, trading in like that about $300 area. And then it never violated the whole time up here, no matter what the size of the correction. The slim ribbon stayed bullish. You can see all of these bars are green, and it stayed bullish. Now, when this top formation came, and you got a warning right over here that momentum was lost, and here is the warning here that momentum was negative, and here is that whole period that we've been looking at right in there of this channel on the downside that's been all in this monthly negative momentum. In addition to that, remember I said to you that this is kind of a area of support right over here. When we look on the monthly, the numbers are a little bit different than what we've been looking at. Of course, we've gotten down this far, and here is an area here on the major 618 that's down at around 905. So that's the bottom of a support channel that we were looking at from like 945. Which I don't have drawn in here right now, but major area of support right now. So I'm going to look at this a little differently so that you can see, because I want real clarity in here when we look at this. I'm going to change the style on here from candle to area so that you can just see how beautiful this screams at you about momentum and the importance of seeing that for investment for longer term holdings. And there it is for you right there, clearly. The whole time period where gold was in a rising and positive momentum area, and this period right now where gold is in a negative or period of disinvestment, period where the long-term holders are coming out, short-term holders are essentially disappointed. So what you see there is that, well, this is going to be an important message. If we get that rally we expect, it takes us up to like 1200s, and then in the long-term process in here over months, it will take months in here to change this unless you get some fantastic rally. I mean, remember, I'm going to zoom in here so you can see that these 3 cycles, or the 6 cycles, are all visible in here right now. This is the one that was the 250-point rally within this negative phase. This is the one that was the $180 rally right over there, all within this negative phase. So all of that shows you that it existed within a pattern that was quite negative momentum-wise also. And I think that that speaks clearly to how you can tell when we're going to get into this rally phase. I think I showed that on the last chart pretty clearly, the daily chart with the weekly cycles marked off, and this longer term pattern that shows you, well, just how negative this pattern has been in gold and how beautiful it was when it was moving up from 300 to close to $1,900 in the gold market. So really, I think a great setup of charts. I think it's really valuable. I'm preparing this on the 27th of November for December 1st when I'm away on vacation, but close enough for this type of a big picture analysis. So what basically we look for is this mid to late December as a bottoming period. We might get a fake pop on the upside and then one more capitulation in there. We're going to get some help potentially by a trend line that gets formed on that daily chart. and the daily 813 exponential moving average crossing over on the upside. That will be some sign for us. And then, you know, the big picture that we look at here is that momentum is still extraordinarily negative, and it's going to take some work in the gold market in order to get that bottom, a major bottom, and the next major bull market to form. Another important thing just to mention is that the dollar has been extraordinarily strong, and that is inversely a negative factor for the gold market. We are looking for a top in the dollar, and maybe a major top pretty soon. That would be in alignment also. So if you extrapolate everything that we're talking about in here into the currencies, if we're right about this bottom in December, we should be right also about the peak in the dollar coming. That should also be favorable to some of the other major currency pairs that we're looking at, and being that the euro is the most heavily weighted to the dollar, I would say that we're looking for a good bottom in the euro. And if you caught my last future speak, you will have seen that I'm expecting that dollar euro to start to turn to favor the dollar very soon. That is the big picture on gold. I loved it. I hope you did. You can send me an email, let me know, and I will see you in the next segment.